So thank you. Yeah, Marvin, I miss ADI. I don't know. There are 8,000 stocks, so I cannot trade 8,000 stocks. So I missed ADI, maybe. I don't know. And don't care if I miss something. So really, we don't need to care. Uh, if we miss whole day, I look at it and I say, damn, I missed that one. I missed this one. Which one is the good one? Which one is the one which where I can trade safely and make money? On the screen, I'm showing you the Bruce Lee's quote, which I came to know about 15 years ago when I was starting. And this was referenced to me by at that time, my mentor. His name was Chief. So Chief, who just lived here very close to my home in Anaheim, he was about 78-year-old person, very nice, healthy, uh, trading for 40, 50 years, God knows how long, because the books he gave me is very old, 40, 50 years old books in some materials. So at that time, when I was starting, I was trying to figure it out what I need to learn, whether I need to learn stock, commodities, futures, foreign exchange, this pattern, that pattern, thousands of patterns. So that's what when I asked Bruce, not Bruce Lee, I asked Chief. I said, "Hey, Chief, this company they are selling so many software, options, stocks, forex, commodity, and they have auto trading, all this." And I bought one of them. I paid $3,000 at that time. So should I buy $25,000? And I think I can put $25,000. And they have auto, another $5,000. The auto software, I can set the auto, and then I can start making money. So he laughed, and then he gave me this code. So it says this: you just need to practice one kick 10,000 times instead of 10,000 kicks. So that's what the traders do. They keep practicing so many things. They move from one system to another system to another system, another system, another black box, another guru, another newsletter, another account, another technique, another strategy, another kind of trader. Okay, today I'm a day trader, tomorrow I'm a scalp trader. No, 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 I will be swing. No, 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 I lost money. Now I need to go stock trading. I cannot trade option. No, 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 I need to do this. And no, I quit. And then 1 year later, okay, I'm back. I got some money. So this is what we do. So I learned that I need to focus on stock. So I listen to him. So I listen to the people who have some gray hair. So I figured out, okay, this man have gray hair, and he got the gray hair not by standing under the sun. He has some knowledge. So I listened to him. I said, okay, I will only practice stock trading and not the option trading. And so another mistake people make, they start trading options. Okay, option have a very attractiveness. It requires little money, and you can make a lot of money. You can lose a lot of money, and so you can blow up your account. You can bring back $2,000. Some broker they just ask you oh, $50 to open your account, and there's no fee. Just open on and download our app. All that is a trap. All that is a trap. So I was in the trap. I'm not saying you don't trade options. You trade, but you need to follow someone who is doing something. So I opened an account with $2,000 and I lost it, and I was trading options. So I figured it out. I stopped, and then I started learning stock trading. So um, one of the thing exactly if you look at the Home Depot chart, I went long on Home Depot exactly like that chart. At that time, Chief sent me message saying, I used to ask him, hey, Chief, tell me something what you trade. So he sent me Home Depot long, 1,000 shares. So I look at the chart and it doesn't make any sense. So I did not take the trade. 3 days later, he sent me email, $3,000, LOL. So I open the chart and I say, holy cow, this how come this Home Depot moved? And then I said, okay, Chief, I missed this trade. So send me another one. So, okay. So 2 days later, he sent me another 1,000 shares. So I look at it and I couldn't make sense. I said, what? I don't understand what he's doing. So I did not take that trade. Another 2, 3 days later, $3,000, LOL. So that's where I said, Chief, you need to tell me what is going on here. So he gave me another quote. I don't know if it's there. I never Google, but then he said dinosaurs can run but cannot hide their footprint. So we need to detect the big boys, the professionals. So that's where I came to know about the word professional. Never knew. So he tried to explain and everything. Then you need to detect the change in the trend. This is where the big boys are there in the initial run, not at the chasing. If you want to chase, you can chase, but as long as the stock is moving up, you're fine. So don't be a momentum trader. So I'm not a momentum trader. The momentum needs to be there. Um, but there has to be something there where which tells you some kind of evidence which tells you that this is the trade you need to take, and then the momentum comes. So you may be early, you recognize the trend, and then the momentum builds up. Or while the momentum is uh, building up, like when you start your car, it goes slow, 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 and then it just speeds up. you know so just so that is the best, one of the trade criteria, that the momentum is building up and then it speeds up. So when it speeds up, then you buy more, because then you are right. So this is what I came to know about the dinosaurs, about the professionals, about the big boys. Now, how to detect, how to figure it out where they are. So that's where I've been doing it for 15 years. So after I started focusing on stock trading, then I bought so many books. I started Googling. I started reducing my time. I was working as a SAP consultant. I was integration specialist, used to study business processes and all that. So I started cutting down my time in learning, and I started focusing on learning on stock trading. So again, I reach out to Chief. I said, okay, Chief, I bought this book, and they are talking about so many patterns and so many strategies and all that. So he started telling me, you need to focus on few patterns, those which make money regularly. They are there, consistent, reliable, easy to find, and all that criteria. So go and learn based on this criteria, not like something which come once a year. It's no good. I mean, and then what if you miss that pattern with that trade? Then that's it. One trade, you missed it. And let's say even if you don't miss it, and you have a very high confidence on that trade, and you bet your farm, and that's the trade which goes south, then what you will do? So identify, trade those, take small, small bets and increase your bet as the trade goes along, and spread your bet. So I spread my bet, and then now I have developed my system to monitor those. So you can spread your bet, and then you have to monitor it properly. So proper exits. So I started focusing on this. So this is what I do whole day, and I will. I mean, it's not easy to explain in just one session. So now, so on one hand, you focus on the patterns or the charts or the techniques, whatever it is. Maybe you have a black box. So you said, okay, I'm going to practice this one 10,000 times, then this 10,000 times, this 10,000 times, all that. But then you can reduce your work if you do some homework and create some baskets of stocks. So I started since I was a business consultant, and I am like I'm a process oriented, so everything process projects. So I started saying, okay, 8,000 stock. I cannot focus on 8,000 stocks. So what are the stocks which I can filter? So I name these baskets. So I have these baskets in my trading platform. I use TradeStation. So these are the baskets. So I said, okay, hardcore stocks. I named them hardcore. So what is hardcore? Hardcores are the one which I really need to watch every day. So about 167 stocks or so, they are there. So I mean, you know those stocks: Apple, Baba, Baidu, Google, Amazon, Facebook, Meta, Home Depot, Caterpillar. So few stocks from each industry group. So I picked those. These are the 165 stocks which I watch every day. Most of them I'm trading. So something is going on in these 165 stocks. Then there is another basket of 250, which I created and I maintain on a monthly basis. So at the end of the month, I go and clean up some, add some. So I have to do this homework, make my life easy. So these are the 250 stocks which are important. So besides this 165, sometimes when the market is not moving or something is, it's like dry, nothing is going on. So then I say, okay, let's see what is happening in core stock. So those 250 stocks, I say, sign up again. This one is moving slow, and I'm just missing out. Like let's say GM. So I don't trade GM often. I don't trade Ford. But they are there. I need to watch these stocks, GM, Ford, and I traded just 2, 3 days ago, closed it. Ford yesterday, GM today. So core stocks. So those 250 stocks. So make my life easy. Now there's another one, non-core stocks. I call them non-core stocks because they are there. I need to watch them because they belong to the market. So if I ignore them, I am risking, I need to watch. So some from S&P 500 stocks, some from NASDAQ 100, some from Dow Jones. So almost all of them, 30, they are 30 only. And then some Russell is, so 2000 stocks. So all that, some gold and silver. So all this, the one which I'm not trading often, but I am watching them. I have to watch them because I need to, if I analyze, so there are various ways so how are you going to analyze the market? So one is a bottom up approach, and another one is a top down approach. So I will explain sometime at the bottom up approach and the top down approach I do. So I do both ways, top down and bottom up. So bottom up is you analyze all the individual stocks in that index. So if you're analyzing Dow Jones, then you will analyze all the stocks in 30 stocks in the Dow Jones where they are. And then you come up with your conclusion about the Dow Jones index. And another way is to see where the Dow Jones index is, or the ETF DIA, or the futures of Dow Jones, and then you say, okay, this one looks, as they aggregate, this index looks like topping out, or this looks like this is the one which is moving, or this is the one which is lagging. So based on that, if I come to know that this index is lagging and is not moving, and it's everything else has moved, so let me see which stock I like to buy in Dow Jones 30 stocks. So figure it out, one of those in that. So I need to do the bottom up analysis and the top down analysis. So I do that every day. This is all day I'm doing it. So now there's a time where there's a lot of money to be made in a small cap. So like these days, and there's a time where there's nothing going on in small cap. They are all getting clobbered. So I have a service called Tiny Stock. So people don't understand. I have this service on the website called Tiny Stock Service. So it's 87 per month. So what people do, I don't know, but because I don't interview them. So there is something going on. They want to trade a small cap when the small caps are just going down. Nothing is moving. So your chances of losing in a small cap is great. Uh, when the market is in trouble, market is red, they are getting clobbered. And the $50 stock is trading at $5, and they want to trade a small cap. So no, don't trade small cap. I cannot provide you any service. When the time comes, then I will provide. So these days, small caps are flying, 5, 10, 15, 20, 50, 100, 200, 400%. So when you catch them, they are just going to the moon. And so I constantly analyze the small cap stock. So this is another work I do. I need to do that every day, or at least 3 times a day, the universe of a small cap. So go to the universe of small cap and find out which ones are fundamentally strong. So for a small cap, they need to have some kind of a fundamental, something going on with them. So this is a hard work. It's not easy to go and analyze small cap. There are tons and tons of them. So I have a basket of a small cap. I I add fresh. It's like a fresh meat, you know. So I add fresh meat. I say, okay, this one is good one. Oh my God, I missed this one. Let me see if it pulls back. Is there any option on it? Oh yeah, there's an option. Oh, there's so much volume. Oh, this one is trading only 60 cents. Okay, I can, there's 100% potential, um, all that. So these stocks are selected based on the volume. Must have at least 500,000 volume, let's say. They move good. If they don't move good, they are a small cap stock. Do they have option? Yes, they do. Okay, these goes in the optionable stock, so I can watch them, so I can trade option. If they have option and the spread is huge, oh no, this one is bad. But what I do, okay, I can buy some shares. So instead of buying option, I can buy some shares, and this one is a good stock, so it moves big. It's part of this index, so I keep that one. So all that analysis goes on, and every day, um, like 6 7 days a week, even on weekend I'm doing something. Then we need to watch indices ETF. So DIA, IWM, QQQ, TQQ, SMH, all this, the gold, SLV, and all GLD, all these indices related semiconductor, gold, silver, inverse ETF. You need to have some inverse ETF, because the market, when they are going, they move against the market. When the market is moving up, they are going down. Maybe the down chart looking great on it. So you can read them on your system, or you have a system which telling you this one is a short one. They are inverse. So this triggering short, because the market is moving up. So they go against the market. When the market is going down, they are showing a nice upward pattern. So you can go long on it. So if you have a basket of inverse, you can also analyze some inverse, some ETF move 3 times the market move. So all these have a baskets. I have a basket of the stocks, and I then imagine this. So think about these baskets. So you have a basket, let's say 165. That is all you have, let's say. Then you have let's say 50 different techniques, patterns. So these, imagine a diagram which I may create later. Imagine 50 chart pattern on one side, and then you're applying it. Those 165 stocks are running on those 50 pattern. So something you will find. If not, if you don't find any day, then it means market is not good. Market is telling you nothing is good. So you cannot push, cannot force. So it's good. If you cannot find anything, then you know, okay, everything is good. Market is so slow, and I can't find anything new trade. I better manage my existing position, and that's it. So do all this homework every day. Then you need to find, then you need to work. So this is all technical. You can have a black box. So you can have a black box which feeds you the trade. So the black box can run on 8,000 stock, or the black box can run on your selected basket of stock. So you can feed. You say, okay, hey, black box, I don't know what you do, but I know you do good, but do it on this 165 stock. I don't care about others. So just tell me about the green arrow and the red arrow. So when the green arrow comes, I buy. When the red arrow comes, I sell, but only do it on this 165 stocks. And the rest, I don't care. So don't care. Okay, it's fine. So you can have a black box. I don't know which black box, but there must be some black box. And then you can learn chart pattern. So you can apply your chart pattern which you learn. You see it, recognize it, feel good. You're a chart pattern guy, you visual guy, so you see it, and then you're applying it only on 165. You're scrolling down, up and down, up and down. Maybe you have somewhere which soft, like on trade session, you can do net change. The stock which is moving up, net change down based on percentage, or the volume breakout, the volume is good, etc. So you can put all those only 265. You can do band trading. I don't do that, like Bollinger Band and a tight trading. I don't do. You can do trend trading. I do that. So the stock is trading nicely, and then pulls back. I missed it, or I'm already out now. I'm looking for fresh entry. So I do that all day long, trend trading. Another, this my one of the favorite is support and resistance. So I'm always looking for some stock to pull back. If the stock has moved up, then I'm looking for some kind of a pullback to the support and go long. if it's resistance, and if I'm looking for in the down market, look for the stock which are very close to resistance. So I have my proper entry, risk is low, and then I go short. But I'm not doing any short. There's no, I mean, there are so many opportunities in the long, so don't worry about the short. Breakout, so some stock break out of the resistance, so that's a good one. Maybe I don't trade, mostly I don't trade the 52-week high because I don't know, it's kind of late unless it has pulled back 3, 4, 5 days after making a new high, and then I go long. So I do that. Breakdown, so some kind of a support breaking down. Um, if you know the support is broken, then you can go short. So I also do this. Gap up, so stock gaps up. This is gap up. I don't trade all the gaps. Today there's so many gap. Every day there's so many stocks are gapping up. So I ignore them unless I read the gap correctly. So I have to be very precise on the gap. This can people go on a gap up and they get clobbered. Gap up needs to be above some kind of a resistance, some kind of a channel which is broken, some kind of catalyst. So I look for that and I see it. I've seen it so many gaps, so I know this one is a good one. If I already have a position and I recognize that I need to add, so so ask a question yourself. Hey, gap up occurred. If I was not in the trade, would I initiate a new trade? And if the answer come yes, then why you're not adding more to your existing position? Why are you just sitting there? Add some more. Yeah, I mean, what people do, they get confused. So they buy, let's say, option at 4, and the option is trading at 5 because it's gapped up. Now they don't want to add at 5 because they have at 4. They look for exit, whereas they're supposed to buy some more 5, maybe buy some higher strike, buy some another month. So I give you example, AVGO, so Broadcom. Broadcom, we had February 610 calls. So till yesterday, so we had a big target. Broadcom moves big. So Broadcom moves big, big, like $20 move. So I had called in Broadcom, and as of yesterday, we were losing about 42% in the option. So I looked at it and I analyzed. I said, okay, Broadcom is still technically is still in the uptrend. Um, Delta went down to like 19. So I said, okay, Broadcom needs to move big. I know it moves big. So and when it moves, Delta will increase. 42% down is okay. So I was losing like $300 per contract. And then I look at the theta, and at the theta, I said, okay, every day I'm losing 34, 35 cents in the option. How many days I have left in February calls? So February is around the corner, 2 weeks left. So better move Broadcom. Otherwise, I'm going to close it, and maybe I can enter when I see it, and buy the March calls. Okay, wait a minute. Okay, tomorrow is FOMC, so I need to wait. AMD was moving and Nvidia was moving, so let's wait for one more day. So waited. So now today, AVGO started moving. So don't sit there and watch that is moving. Do something. If you have money in the account, we can buy for recalls, buy more. I do that. So buy more in February, same, but Broadcom was, I think, 571, and we had 610 calls, and it was at 571, 72 yesterday. So initiated a March call. So now initiated March calls because it's looking good. So bought March calls, and then started thinking to close the position in break even. Break even February, make money in March calls. But it so happened it moved so much today. In one day, it moved 22 points that we got 42% gain. So little gap up from yesterday, and then it starts to move, and then non-stop moving. So that's I like this kind of, if you look at the Broadcom chart, daily chart, you will see there are two tiny candles today after a down move, to yesterday and the day before yesterday, and then today is a big move. So gap up, I like that for initiate. So ask question when the gap up. If you have a position, will I? If I see that, if I didn't have a position, will I enter? If the answer come yes, then do something. You don't have to initiate new position. You can add If the market goes down, you can just wait, and when the market reverses, then you say, okay, market went down, my position went down. Now these one by one, I can add more when the time comes. So you can add more to the position if you have the funds. So gap down, so add do that. Gap down, I like gap down, but most of the time I don't trade gap down. I trade gap down reversal. So I trade gap down reversal, and I don't trade gap up reversal. Is hard unless I read it correctly, and it's a bearish market, downtrending market. Then I say, okay, gap up and then reversal. Gap down reversal, I look for gap down reversal in a uptrending market. So I give you example of Intel. Intel 2-3 days ago, it gapped down. So I started watching, and then it made a cross where then it goes down and then it comes back up, and start trading at the open of the day, and then it starts to move up. So that's where I went along on Intel. So after the gap down, and today closed. And then same thing, intraday reversal. So when an event is coming, the market is red. So you when you come to the, let's say you come to the office and you say, oh my God, market is red. Let's open the, you open your platform and you say, damn, I'm down this much. Okay, no problem. So you don't look at the dollar point of view, you need to look at the percentage point of view. So I say, okay, I'm down 1% now. Okay, I'm fine. I'm not panicking. So, worst come worst, if all hell break loose, I have to close. So I say, okay, everybody said like that. Oh my goodness, now the market is down. Let's see. So you're watching the market intraday and looking for a clue. And so nothing is like, there are some stocks which are moving. So the one which are moving in your favor, like AMD today, and you have a position and you are thrilled, AVGO is moving, and then and some gapping up. So you're taking care of all that. So we take care. I'll explain to you in this later how we send you the updates. So pre-market strategy we send you. So today in the pre-market, I'll look at the AMD. So it gapped up. So it's gapping up, and we have a position. So intraday, what is the high? Okay, it's 78 something or 79.10, etc. So my order is ready. I'm adding more. I have shares. I can add more to my shares before the market open. I cannot buy option. So I know on a daily chart, I know on a landscape of a daily chart where it will drop. It's like something drop from the sky. So boom, it will be there. So I look at it and I say, okay, yeah, it's fine. The target is 84, 85. So if it opens at 79, I'll be fine. And it's moving, active, and they're talking on news, everything fine. Let me buy 100 shares or 200 shares, whatever I did. So, and then send the alert, target, revise, everything okay. So this after taking care, and the market is red, so close not all, the one which are hitting the target, you close it. And then when the market starts to show some sign and the FOMC is coming, you're waiting for the signal for the market. So initial reaction could be down and then could be up. So during the day, making the basket of all the stocks which show sign of reaching some kind of a support level. So some kind of a support level, and then they start to move up. Then you say, okay, this is stock. Let's say 10 stock. Out of 10, which one is very close to the support? So this one, okay. Which one? MasterCard. I think MasterCard is at the support. If FOMC comes and something, I don't know what they will say. Whatever it says, it will show on the chart. All that I care. Look at the Goldman Sachs. Okay, no, good. Okay, MasterCard, yeah, this one is good. Visa, let me see Visa. PayPal, Square. So all this stock related to finance, we need to pay attention. So find out MasterCard, add support. I will go long as soon as the FOMC come, and I wait 15-20 minutes and I see it, because if it comes, it moves up, I will be fine. I don't need to go long before FOMC. So intraday reversal, making a list of all day long. I'm making list of all those stocks which are showing some kind of an intraday reversal. So they went below the support, now coming back above the support. So how good if mm, this is with a stock which, let's say, gap down below support and now near the day closing above the support, or just falling down and then find the support. Broke the support and then come up and close this above the support. So this is what I do all day long. I'm watching this and trying to figure it out, my entry point. Another way is moving averages breakout. I don't do that, but traders do. Like they go for 50-day moving average, 200-day moving average, crossover. So I watch the moving averages, but I don't trade moving average. Moving average for me is just a line. I can draw 21-day moving average, or I can draw 50-day moving average. So it's just a line moving average. Um, 365 traders, they have 365 moving averages: simple moving average, exponential moving average, weighted moving average, adaptive moving average, crossover, golden crossover, la la land, 50-day above. So all that, I don't do that. But there are, so I just keep an eye on it, but to see what the other traders are doing. So all day long, there's so many things going on. So these are some of the things. So looking for price discovery. So when you look at the price discovery, then when you see something, you need to feel good. If something is if is so look for the sign in your tummy, in your body. You should feel good about it. Oh my goodness, this one is I wish I had gotten 2 points before, but it's still good. I need to go long on this one. This is the one. This is for me. This is made for me. So let's see if option is correct. And if I have done the homework, I already know the options are good. And if there's a activity going on in the option and the volume is great. Okay, so that is the wisdom of crowd. So um, most of the time the crowd is right. Sometimes the crowd doesn't know, and you genius, you detect it, and then the crowd follows. Maybe the big boys are there, so you're detecting the big boy, and big boy is buying slowly, slowly. He's very smart. So the wisdom of crowd, look for the wisdom of crowd, and it's available on options. Maybe you can see what is going on. I do not trade just based on like people advertise. I see 10,000 contracts being traded on this paper, and I'm long. I will be long for 2 weeks, and then and nobody is asking them what happened to that trade which you went long. So I don't do that. I don't just base on my trading based on option. I am getting some confirmation from the option. And if there is no volume, or the spread is normal, or even the spread is wide, if the spread is wide in option, there is a reason for this. The spread is wide. Something is going on. So don't ignore that. But most of the time, the crowd is correct. The wisdom of crowd is there. So find a way to get some confirmation from the crowd and go for it. So, but moving averages, breakout, etc., I don't do. So then once you identify all that, then you can filter them further for further confirmation based on volume, based on price, based on average true range, based on sudden spike in volume, based on sudden move in price. So volume filter, you can put volume filter, say like this. You say, okay, uh, if at this time of the day, if it's trading already at 30% and above of its average 10-day volume, then something is going on. I need to pay attention. So something called relative volume. So I do that analysis, relative volume. Every half an hour, I analyze the relative volume of a stock. If it's above average, below average, unusual, something going on. So constant analysis going on in the volume. So volume is telling you something. I also look at the climax volume. So if a price is extreme and the volume is extreme, that's the time to exit, not to enter. So pay attention. Volume needs to be normal. It can spike. So you can watch, you develop your system to see the spike in the volume that gets your attention. So volume spike gets your attention. It doesn't mean we just go in, the wave come and then wave go. So the wave is just telling you, okay, you need to pay attention to this, something is going on. But it doesn't mean that, like, say, unusual volume, 500%, this is the one you need to buy. So you buy it, most of the time you will lose money on the spike, based on just a spike, because big boys know how to get your attention. So don't do that, but just keep an eye on the volume spike. Sudden move in price. So uh, if we have 500 stocks in the basket, we cannot watch all the stocks chart. We cannot watch, but we need to learn the, when the horse moving, tuck tuck, we call it, in our language called tuck tuck. So it's like a horse is moving, and then you can feel the rhythm. You can see on the chart, on your screen, um, like only the basket of a stock, that the something is going on. It was 10 cents up. So let's say you set your system. You say, okay, if any stock moves half a percent in a 10-minute time segment, I need to be informed. So any stock which moves 10, 15 in 10 minutes or 15-minute segment, let's say half a percent move or 1% move, then it gets your attention. Then you say, okay, why it moved suddenly? So you want to know the important thing, event occurring. So set your filters. So all these filters are going on during the day. I do that. Then all kinds of alerts you can set up. So as the time goes by, you can, if you're new to trading, uh, don't worry, you set up all the alerts. So um, um, price discovery. So this is just the one of the thing, price discovery. Before that is preparation of the baskets. Before the basket, you need to know what account you're trading. Before the account, you need to know your objective. Before the objective, you need to know who you are, and your family, and your papa, your mama, your children, everything. You need to know who you are. Then you say, okay, I'm going to trade this, I'm going to trade that. This is my account, what I'm going to trade. These are the basket of stocks. So I sit down evening time, relax, and do my preparation. Then during the day, I go through this price discovery, figure it out, all this. Then filters running. So filters tells us that this is the one I need to, out of all this 165 stocks, these are the 10 stocks. These meet my criteria, and I'm getting the alert. So alert could be opening range breakout. So meaning uh, if it makes a new high in 30 after 30 minute, alert me. So I get alerted, hey, this one is made a new high in this 30-minute pass, and this is making a new high. I need to look at it. Or 15-minute pass, this one is making a new high. So you define your time interval to give you the alert. You can set the you note in the morning, you say, okay, this one made a new this one made this high. So I set the alert. If it goes above this high, after 30 minutes, 40 minutes, if it makes a new high, I need to be informed. So you take a look at that. Or if it's making a new low, you need to be informed. You may set the alert 1% up, I need to be notified. These are stocks on my watch list, and it went up 1%, I need to be notified. 1% down, I need to be notified. Volume percentage, some kind of a 10-day average volume, 14-day average volume, or 30-day average volume, whatever you think fit. And then it's moving 30%, 40%, I need to be notified. So then I can evaluate. It's trading above average volume, I need to be notified. Breaking above the resistance, so I mark the line on the resistance line. I say, okay, this is the resistance line. And then I say, okay, this resistance is too strong, or this is weak, or this is in between. So identify what kind of a resistance line it is. And then you set the alert. So when the stock is breaking that resistance or approaching the resistance, you get notified. So you say, okay, this you already have a position in AMD. This is moving, and this is the resistance line, and it's only half a percent away from the resistance. Do you want to be alerted? You say yes. So you get the alert, and you say, okay, this one AMD finally it's reached the resistance, and only half an hour left. I'm so much up. FOMC, blah blah blah, gapped up. So I need to take majority of my profit. So if you develop this, then you get notified. If it's breaking below the support, oh my God, I have a position in this and it's breaking the support. So let me see what is the volume. What else is going on in this? Do I need to bail out, or I need to hold for another day, or what else? What evidence I need to look at? So if I have a system of 10 evidence, I need 10 evidence. Let's say they could be low, um, um, like a low criteria. Evidence is not that weak evidence. So let's say there are weak evidence and there's a strong evidence. So if you have 10 kinds of a criteria for evidence, then you say, okay, this is a weak evidence, but they are all lining up. There are 10 evidence, but they are weak, but they all pointing me, telling me to get out. So these weak evidence can turn into a strong evidence, and then I'm really screwed. So if that is happening, I need to be notified. So some kind of a alert, sharp reversal from resistance. So stock gaps up, hit the resistance, I have a position and I don't even know, let's say DQ. So DQ gapped up, hit the resistance, and I don't, if I don't pay attention, then I lose the profit. So sharp reversals from resistance, I have a position, I need to get out. Or if I'm looking for the puts in down market, then I initiate the puts. Same thing, sharp reversal from support. So if I draw my line for support, and I have a position in it and it's just reversed from support, so I better pay attention to it and say, okay, I don't have to get in right away just for average down sake. I average, no, because I will be losing more money if I don't pay attention. So I say, okay, sharp reversals from support, so just wait a minute, do I need to average down? Yes. So I give you example of Charles Schwab, SCHW, that's what it's doing. So buy some more. Alert, you can set crossing moving average from below. So 50-day moving average, the stock is moving from below, going above the 50-day moving average. So give me some alert, crossing moving average, some from above. So give me the alert. So let me see. So just to see what others are. So we need to know what others are watching, what the other guy is doing. So even though you don't you don't follow, but we need to be aware of. So this is not a triggering, some kind of a trigger for to take the trade, but we need to be aware of what the other guy is doing. Okay, let's see. Okay, yeah, I see that it's crossing, and I see some confirmation coming. So we need to be aware of what the other guy is doing and how they are behaving, because there is a wisdom of crowd, where the crowd is mostly right all the time. Most of the time, the crowd is right. So all these alerts come. So all this goes on during the day, after the day. I have a process of opening the loop, closing the loop. So all this goes on, and let's say 30 minutes gone by, the open positions are taken care of, whether to close the position, take the profit, or adjust the target, adjust the alert, send the messages to the members, and all that. And then I find, let's say, meta calls. So I send you the alert that I'm buying. I send you simple alert. I don't give you the story. And we don't need to know the story. Even I don't know the story. What is, if Meta is moving, if MD is moving. I see it. I ask question. Shoot first, ask question later. That's what it is. Shoot first, ask question later. What, by the time you analyze, and you're not expert in analyzing the news. Is there somebody already knew it? So don't worry about the news. It's there. You're not an expert in analyzing. There are millions of people, they already have the news um, yesterday. So we just send you alert, say, in the email and the subject line, and SMS. So Meta call December 130, buying to open 10, and then in the email body, describe, what does it mean. Sometimes people don't understand what is 130 mean. What is this 130? I can't find 130. So strike. Okay, so third Friday, so we buy third Friday expiry. So all that. And then so your job is to set the limit order. What I give you is the limit order, not the market order. So you put the limit order. If it has a little spread, you can shape the spread. You can tilt towards um, between ask and bid. So a stock moves a little bit up and down, and you get fill, unless it's just keep going, and you're just uh, left out. So it doesn't happen often. When you set your limit order, you need to make sure that you get filled. So just keep an eye on your limit order. If you buy 10 contract, if you put the 10 order, 10 contract for 10 orders and contracts, and then you fill 8, then cancel the other 2. Don't leave it open. Do not buy the market price. Not a good idea. You get the worst fill. Stock should be trading in a narrow range. So they trade in a narrow range. And you can see on a 5-minute chart or a 10-minute chart. So if it's trading in a narrow range, you will get fill. It's not like a stock is just alert came. I'm not creating wave in the market. It's not like that. I'm not creating wave. I'm not Jim Cramer or some guy who buys first and then send you the hey, buy this penny stock, and then everybody rush in and then he's getting out. So I'm not, there's nothing I'm doing that I'm not creating wave. You will get filled, so you get filled. And then if you're not filled, later I send you the target. So I send you 3 target. I explain again and again and again, and explaining again here. So their target I call green, yellow, and red, which is first, second, and third target. I will explain to you in the next slide. So you look at the potential in the trade. So if you can identify the potential in the trade, then you can make some decision. So don't, let's say I send you the alert at 100, trading something at 100, and the target I specify at 112, and it's trading at 101. So you know that, okay, there's still $11 potential. I didn't miss the port. So make some judgment, your own skill, and pay attention to the mid target, and initiate at least one contract. So you are in the trade. So when the stock is in my watch list and I'm not sure that I will, so I I buy some shares, like 10 shares, 50 shares, 100 shares. It depends. I open the position in with real money. I do that so that that's the way, it's my habit. So if I know that I'll be buying 500, and the stock is just doing its thing initially, I just dip my toe 100 shares. So um, if I know if it's red, it's not just moving, it's just there sitting in red, 0.5% down or 1%, it's not moving, and I say, okay, what the hell? I just it's like a horse. I just close that 100 shares. It's okay. I close it and then I put something else, on something else. So I'm just giving you the way I do, to just to make sure that I don't miss it, because when I have a skin in the game, I'm very, very watching that trade. When you have a skin in the game, you're really watching it, uh, to add more. So pay attention to the yellow target, and so we go through the analysis. I'm analyzing, fine tuning, and then I'm entering the green target, yellow target, and red target. Then it is being sent. So also, so pay attention. So shave the spread. If you sometimes there is no spread. I mean, you cannot kill the market guy. If there is a spread of only 10 cents and you can mid price. So take the bid and ask, and then you can bid at the mid price. You take the average, or you take. Um, Sometimes the market maker will give you to get rid of you. Like he considers us like a pest. He says, okay, this guy is a pest. He's sitting there destroying my profit. So let me give him the one contract. So if the bid is, let's say, 960 and the ask is 10, so you can get the average 980 and you put your order there. And if you have one or two contract, you will get filled. So you will say, okay, he will get rid of you fast. So you can do that, shave the spread. If the spread is only 5 cents and then you're sitting there, you're just sitting there. So don't haggle over the price. You just get in, and don't worry about it. So here's a guide. I put it in my guidebook, to chase or not to chase. So pay. You can have this guide in front of you. So pay some little extra if you think the stock is moving and there's a news and everything is good. So you can pay something. You can pay up to 50 cents if the contract. Sometimes the like a Tesla or the big movers like Broadcom, etc. They have a big spread like 80 cents, 90 cents, because they move 20 points in one day. 20-point move, if the delta is 50 cents, you get $10. So if there is a $10 potential, and you haggle over 50 cents, you miss that $10. So don't haggle over 50 cents if the contract is like in this range. So have some guideline, pay some extra. If it's 70 cents or 60 cents, then maybe 5 cents more, that's it, or 3 cents. So you just move on, buy something and just be happy. So do that. Don't be over anxious on partial execution. We get, if you have a 10 contract order and you get 7 filled, so it's 7. 3 is okay, you didn't get it. Don't pay extra for remaining 3. Maybe you put 3 at a lower price. It's your bid. Someone will want to sell to you, so someone will sell to you. Maybe the stock moves in up and down, and boom, you get filled. So and otherwise you cancel it. So cancel it within 5 minutes. You don't want to leave your buy order uh, hanging in there, especially uh, overnight. So don't do that. Buy order is good only for a few minutes. Otherwise, you cancel it, you reset it, and don't. It's supposed to be only the day order. So don't leave it the buy order overnight. You can leave your sell order overnight. So that's a good practice to keep your sell order good till cancel. So usually is valid for 90 days or 120 days, whatever is your broker policy. So sell order is good. You can always cancel, but if you don't watch, you get out with some profit, so it's okay. But buy order is not good to keep overnight. So do that. So after we send the targets, after we send the alert, then we say, okay, so I go and make sure. So go through all the analysis, everything to make sure I'm not missing anything. Uh, um, you know, not all information is available to us at any given moment. Nobody knows everything, but to the best of the knowledge, you say, okay, this is where the target should be. So this is what I'm setting, and I can always adjust my target later as the trade progress. So be flexible, but have some kind of target set. So we advise a 40%, 50%, depending on, sometimes 100% by default. If you buy a 50 cents option, then the default should be 100% gain. If you buy a $5 contract, then default is 40%. So it depends. If you buy a $10 contract, then 30% is good because it's $300 per contract. So it depends the price of the contract, and set it up by default. So if you don't, um, so I go through. So when I say I go through, I get notified. Okay, we send this trade, and this one doesn't have any target yet. So my job is to analyze and feed the target, and then the system send you the target. So if you don't receive it, be patient. Just set the default 40%, 50%, 100%, depending on the option price. So once we determine the target, we call it green target, yellow target, red target. And the reason I call it green, yellow, and red a long time ago. So it's like a traffic light. So even the little kid, my daughter, knows what this green, yellow, and red. They teach you in the schools, green, yellow, and red. Some adults don't understand this, so it's okay. But majority of the people this is international, like green, yellow, and red. Except maybe in China, red is when the stock goes up, they show in red color. So it's just a name. You can name or give any meaning. So I named it as green, yellow, and red. And the reason is the green means, okay, everything is fine. It's going to hit the green target. The probability is great. Yellow target means the probability is some 85, etc. Red is higher. So I'll explain a lower probability because it's far. So I give you the analogy of, let's say you go from San Diego to Seattle. So if you're going from San Diego to Seattle, and you inform your friend, you say, okay, I'm leaving. It's 8 o'clock in the morning. I'm leaving. So if you put in the GPS, the Seattle, it says 72 hours drive. So GPS is assuming you are going constantly. You're not going to stop anywhere. So you just keep going and hit 72. In 72 hours, you may be. I'll put after I talk. I keep giving this advice, but I don't know how many hours it takes. So I can quote you the correct uh, hours it takes from San Diego to Seattle. So let's say it's 72 hours. So because GPS is the Seattle is so far, so it's telling you 72 hours, but you're not going to reach there in 72 hours. You will reach there maybe in 8 days. So that's the concept of red target. So I'll explain first the green target. So the green target is the target, let's say from San Diego to LA. So it's 8 o'clock in the morning. It's Saturday morning. Nobody is on the road. I used to do that. Once upon a time, I used to go to LA from San Diego early morning. Somebody wakes me up. Hey, wake up! It's time to leave. And then we go. and then arrive in 1 hour. So it's fast. GPS tells you 1 hour, you arrive in 1 hour, unless you take some exit. Most of the time, if you are disciplined and you say to your friend, I'm leaving, I will arrive in 1 hour, you will arrive in 1 hour. Maybe 1 minute late, maybe 1 minute early if you speed up. So that's the concept of green target, immediate. So you have a high probability of reaching LA when you leave San Diego at 8 o'clock in the morning. There's nobody on the road, so you have a high probability. So that's that's the design that. So analyzing the chart and then saying, okay, what is the highest probability? Which is what is the target which I where I can maximize my gain. So I'm not giving up my gain. I'm not saying for the sake of hitting some kind of target that willy-nilly and just put it, but analyze it, because we need to maximize our gain. So you ask yourself, what is the um, most uh, high probability that this target is going to hit, and you are analyzing it before you even enter the trade. So you analyze it and you say, okay, this is the one. This one has a very high probability of hitting it, and then I call it a green target. So when that target is hitting, I get the alert. So my system tells me when the green target hit, I set the alert. So I get the alert, green target hitting, sell 1/3. But it doesn't mean I just go and sell 1/3. So it's just the alert. So I look at it and I say, no, I'm not going to sell 1/3 at green. It has more potential. So either I'm going to revise the green target to the upside and send you, or I send you the alert, don't sell. So you don't receive any alert from me, or rather you receive the alert to keep holding. So like today, AMD, keep holding. I just send you every 30 minutes just to keep holding, because keep going, so keep hold. So don't sell 1/3 just for the sake of 1/3. This is a bad, if you do it, um, if you do it willy-nilly just for the sake of 1/3, then this is not a good trade practice management. So you don't want to sell your winner fast just because it's hitting some kind of a psychological, not a psychological, some gain, psychological gain. You see some green on your screen and you say you feel good and you say, okay, I'm going to push this button and I have 10 contract and I sell 5. No, so must have some either you are overexposed in your position, or some other things are triggering in your system. So there are so many variables for exits. So only you know. So I know, okay, these are the variables. I don't know individual. I have thousands of members. I don't know what you're doing. Some have million dollar portfolio, and some have $10,000. So a person who has $1 million portfolio, he is, I don't know, maybe buying 100 contracts or 200 contracts, and he's just going buying, and then he must sell because he's overexposed in that trade and it's just ballooning. So he may sell 1/3 of it. But if you have only 2 contracts, you're not selling at green. So you wait for the next contract, because if you're doing it, then you're locking your gains early, small, and then when the loser comes, it will be a big one. So you don't want to do that. So there is a saying: with you don't go broke locking, taking profit. You can go broke taking profit if you take a small profit. So think about that. There has to be a balance. You can go broke. So that's not the right advice that you never go broke taking profit. You can go broke taking profit. In 1 month you will go broke. So example is, if you put 1,000 trades and 999 are winners, and they are just $1 winner, so $999. But that one trade was a loser, and that is $1,000 loser. So you lost your money. So don't do that. Have some management, so trade management. So I send you the alert when I see fit that sell 1/3 based on some kind of a target hitting. So mostly it's a green target. So I do that. Once I send the alert of sell 1/3, then my system knows that I send you this alert 1/3. I know that I sent you. It's there. It's documented. So now I know, okay, I send the alert 1/3, but I don't know what you did. So maybe you sold all, maybe you sold half, maybe you holding all positions. So, but based on my system, I know told you to sell 1/3. So you sell 1/3. So if you bought 6 contract, you sell 2. Now the yellow target. So yellow target, think about in your journey. Yellow target is like San Francisco. in your journey from San Diego to Seattle. So if you're traveling from San Diego to Seattle, the green may be Santa Barbara. Sometime it's LA, then it's moving. Then I move the target up. Then I say, okay, no, 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 we're not going to stop in LA. We will stop in Santa Barbara. The road is clear, nice, everything. So the green could be Santa Barbara. Then the yellow could be, in the journey point of view, the yellow could be San Francisco. So in San Francisco, you hit the traffic. So when you enter, you have no way out, no bypass, nothing. You just hit the traffic. So yellow, imagine that you're going to hit, and then you will slow down, and all that. So yellow target is based on some kind of resistance level, some kind of a overbought level, but it's not major. So San Francisco is not your major destination. Seattle is the one, but you have to go through San Francisco. So if that happen, and if I see that this is a major, something hitting, and it's not, it's going to, mm, let's say it just accelerated in, within a 2 day or 1 day, 3 day, quick, boom, 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 and it just go to yellow target. So the gain becomes, in option, the gain is higher percentage wise. And then this is the end of the day, or some other position is looking better. I need to send you the trade alert. So I know I lined up some trades I need to send you, and I know this yellow target is hitting, and it's near the end of the day, and it moved fast, momentum, and a lot of buying, and it's some has some resistance. So I send you the alert. I mean, when the yellow target is hitting, I'm sending you the alert. The sell 1/2 or sell 3/4. So sell majority, sell 1/2 or sell 3/4, something like that. So if you have 8 contract, you sell 4 or 6. So only you know what you have. So I document it. If I send you sell half, I document it. If I send you sell majority, then I document it. So now the trade is sitting there. So the criteria is that the trade needs to move the symbol, whatever it is, doc, cat, AMD, NVIDIA, it needs to move now towards Seattle. It's not like you just reach San Francisco and then you say, okay, I'm gonna check into the hotel and I am gonna spend 1 week here, and your friend is waiting in Seattle. So just like that. So once you sell that yellow, is not you wait forever. So if it's hanging in a yellow target, then because if you bought at 10 and you sold something at 15 at yellow, and even if it's sitting at yellow, after 1 day, 2 days, if the option is not trading at 15, it will go to 14.50, then 14.40. So you're losing. So you have to analyze that how much you will give up to gain further. So you have to analyze from that point of view, not from your buy price. So this is one mistake traders make. They compare it from the buy price. You have to compare. Okay, if I don't sell here at yellow, which is one of the major target, I'm looking for the red. How much I will give up if it falls tomorrow? So the answer should be something which tells you whether to hold or to sell. So I wait for 1 or 2 days. I know how much we told you to sell. So if the stock is just hanging around, then I send you the alert to sell rest or sell the other half. So some kind of a trigger is sent to you. So then the trade is closed. And even if you don't sell, then so sometimes the trade just keep going, going, going. Like Carvana, we send you the alert to sell, and it just keep going, 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 going. So it happens, but not often. So yellow target is like San Francisco from San Diego. Now come the Seattle. So the stock can keep going, 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 and it can go to Seattle, but there are a lot of stops there and here and there, and it's taking a detour. So all kinds of things are happening. So that's why it has a little lower probability. But then so sometimes the stock just goes and hit the red target fast. So red target is far from the entry point. So it's the ultimate target. So when I'm analyzing, so I mean, you can do that, or you don't have to do. You look at it and say, okay, where is the major resistance level? Where is the major turning point? Where the stock has gone before and it did some kind of a, we call it in my language, kalabazi. So where it did some kalabazi, like a gymnastic move. The gymnasts, they go run, and then they just upside down, and then they sit straight. So and then they go further. So if the stock is supposed to do some kind of a kalabazi at that time, some gymnastic move, so you read that and you say, okay, before it does another gymnastic move, I need to be out. I don't want to hang around in this stock at that price level. So that is the red target. So because the distance is far, so it's from San Diego to Seattle. So it will take some time. Not maybe, if it goes straight, it hits, and then so the gain will be huge if it goes straight and hits. So we get lucky sometimes. Sometimes it gaps up. Sometimes it just moves. Some news come, earning event, something happen, and then it just goes. So if that is the case, you exit. Sometimes you don't need to exit right at the before the red target, just before you exit. So let's say before you reach Seattle, 100 miles to Seattle, and you see the scenic spot, you check into that hotel. You say, okay, when I wake up in the morning, I'll just go to Seattle, fresh. So maybe the red target is not there yet. It's very close, like a 0.5% left or a 1/4% left. So some kind of, so I have this system I set up where I get notified red target is approaching this much left. So at that time we need to analyze, okay, is it worth it to hold this further for this little gain and risk all the profit I have? So I analyze it and send you the alert to sell rest or sell all or sell everything. So whatever it is, the before condition. So I send you the alert, sell all, sell rest, whatever it is. So today, like AMD, again, I kept revising the target upward and kept sending you alert to hold. And then finally I said, okay, what are the chances that maybe AMD further goes? It's not that it can go to the moon, but from the option point of view, I said, okay, I need to sell and lock the gain. So I did that. There are something which happens at the red target. So the red target is designed, and you need to design your red target such that uh, I will answer all the questions later. I'm not reading the question, sorry. So sometimes the red target gets conquered. So it's like something gets conquered. So when something gets conquered like that, like battle, and then it gets conquered. So when it gets conquered, then you need to make sure that you keep that territory in your possession. You don't want to give back. So it's same kind. So once you reach Seattle, your car should not roll back down and you end up in San Francisco and then end up in Santa Barbara. And by the time you realize you're back to San Diego, and then you say, what the hell happened? I thought I'm in Seattle. So that's what it is, the red target. So red target is a major target. So if it gaps above or something happened at the red target, then maybe you need to hold that position. So I send you the alert that the hold position. You get the up arrow in your trade alert when the targets are revised. In the email I pointed out, or in SMS message, the green arrow. When the target is revised, you said next to the target you see the green arrow. If it's revised downward, you see the red arrow. So you can visually see what is happening to the targets getting revised. So I do that. So the stock should stay above the red. So you need to stay near Seattle. If you are in Seattle, you don't want to come back. So if the stock keeps moving and have a momentum and suddenly something happen, is conquered, safe to hold, then you just keep holding. And if it breaks, that if the red target was based on the resistance and it broke the resistance, it went above. So a lot of time, the meaning of resistance is sellers. So think about it. The translation of resistance is seller. The translation of the word support, buyer or demand zone, or resistance supply zone. So if you analyze the resistance correctly, you are actually analyzing where the sellers are sitting with their guns. It's like ambushing you. So you relax and they ambush you. So it's like that. So sellers overwhelm. They know the time to unleash their sell program, and suddenly you see, the stock just moving up and up and up and up and up, and then you go take your dog for a walk, and then when you come back, and you see that and you say, okay, you know what happened? 3 points from pullback, 3 points from the high, and it was a red target. So maybe there's nothing wrong with that stock. It's just the when you were walking the dog, FOMC meeting was going on. So didn't you know that you were not supposed to walk the dog? So be careful. So if that happened, then sell immediately. Something is happening to that stock. Maybe that the news come out. So and it so happened when it's magically the news come out some at some major target. I don't know. It's just the name of the game. The stock is sitting at the is just conquered the resistance, and the sellers converted into buyers at that time. When the resistance is conquered, the sellers turn into buyers. So there's a whole psychology at that level. And then maybe the news come out and all the buyers, they turn back in as a seller, so they just start dumping. Or maybe the previous buyers, they were holding it thinking, okay, the resistance is conquered, now we need to hold just like us. And when the news come, they all exit from same door, and that door becomes very narrow, so everybody is just exiting. So be careful at the red target, and if you see something is not looking good, you sell. So don't worry about it, sell. There's another trade. So don't guess it unless you are, I mean, you are cheetah and you can read. So I'm glad I have members who are really cheetah, and I have members who have been trading for 40, 50 years and they cannot read the chart. So different people. So markets are dynamic. So I send you the revised target. So this fits perfect with the AMD. Markets are dynamic, so you don't need to be rigid, stubborn. You need to be flexible. So be flexible, see what's going on. And this is your opportunity to make money. Finally, you are lucky and you're going to make a lot of money today because the stock you have is gapping up, the news come out. So be very alert, market dynamic, be flexible. Various reason to revise red target, and the red target is revised to capture more gains. So I keep revising the red target and keep sending you the alert to capture more gains, but you can watch your own chart and make your decision. So revision of targets are so targets. So even the green, yellow, and reds are adjusted, and I send you the alert that okay, I'm adjusting it, fine tuning it based on all the things are happening in the market. So for calls, I can adjust for upside and can also adjust to the downside. So when it's like a GPS, again, it's a GPS. So when you leave San Diego to LA, initially it told you 1 hour, but then it adjusts your timing. If you are speeding up, maybe tell you no, you will arrive in 59 minutes, not 61 hours. So you say, oh my God, I saved 1 minute. So same concept. It can be adjusted to the upside or calls, or it can be adjusted to the downside. So 59 minutes now, not 1 hour. It is speed up, but something is going on, and you can gain more. Or for the puts also. So for the puts, the targets are to the downside. So when we are trading puts, if I see the potential, then I revise the target to the downside to capture more gains. So when I'm doing that, I replace. So you will see I replace the green target with the yellow, and the red goes into the yellow column, and then I give you another target, red target, and you can see on a arrow also, up arrow, down arrow. Going forward, I will also send you the expected option price. So, it's kind of accurate. So I give you the expected option price that if the yellow target hit, then this will be the option price somewhere very close. So you get some kind of idea. So let's say if I send you the alert at $10 to buy Meta, $10 call, and the yellow target is something like, let's say 108. So I calculate the option price, that when the target hit 108, what would be the expected option price. So I will start giving you that. So you can, as a default, you can set that option target sell, because you need to know. So I will give you, and then when the trade is developing and going towards the yellow, then I finally adjust it and send you. So you can cancel and sell. So all sell alerts are sent. So and the new targets are given. Sometimes the targets are shrinked. So don't, sometimes the way the market moves, and it takes time. And instead of reaching Seattle in 67 hours, you reach in 8 hours. And I give you example. One time I bought a buddy pass for back home. So this guy sold me the buddy pass for $100. He said, "Hey, I'm an employee of Delta Airline. I give you this buddy pass." And I said, "Oh my God, only $100!" And he gave me $100 um, a ticket. At that time, I was working in a gas station, and my boss laughed. He said, "You know what? You're buying $100, okay? You know what?" I said. So he said, "Well, you will find out. Just go and travel." So I told the boss, "Hey, boss, I'm leaving," and I called my family. I said, "Okay, I'm have this flight. I will arrive in like 24 hours." I arrived in 40, not 24 hours. I arrived 4 days later because the buddy pass was not working. I was not being allowed. I got stuck in Switzerland for 2 days. Then I got stuck in Dubai airport. Finally arrived, and my family was saying, "Hey, you left 4 days ago. Finally you arrived." And the same way I had to come back 4 days later. So I told my boss, "I'm coming. Keep the job." He said, "Okay, don't worry." And then I arrived 4 days later because the same way I have to go through. I got stuck in Abu Dhabi, then I got stuck in Zurich, then finally I arrived US. So when this is happening, initially you think everything is clear and I'm going to make this much money. But then the trade is trade. It gets stuck. And then it gets stuck. It creates some resistance. It creates some resistance. And by the time you realize it's not moving, so the target get revised to the downside. So when that happens, I send you the alert saying, okay, target's revised, and you can see the down arrow. So you know, oh, he revised it to the downside. And we send you clearly in the subject line, targets are revised to the downside. So all that goes on. So imagine what I'm telling you for an hour or so, what I do. So all understanding multiple exit. So the the professional traders, the big boys, they um, they are expert in multiple exits. They are experts in scaling in. They are expert in scaling out. They are expert in buying multiple contracts. They are expert in buying a different lot. Here, little there, recognizing the opportunity and building the one position big and huge in profit. They have exposure in that, but that's a once in a week you get that kind of trade. So develop this expertise in multiple exits. Entry is simple. I mean, any monkey can enter in the trade. So ask monkey, "Hey monkey, today get me one trade. Which one?" And a monkey will say, "Okay, buy Apple today. I see it moving." But then you ask monkey, "Where is the exit?" Monkey don't know where the exit is. So that's where we get caught. So understand the multiple exits. So we have this all this kind of exits. I send you and I document it. So sell one third when green is hitting, or some kind of a criteria, some kind of exit protocol. Sell half, some kind of a exit protocol is triggering. Selling majority, something is happening. Maybe the momentum is big and the price extreme. The move is extreme. Based on the normal move the stock does in any given day, it has broke that normal behavior. So when the stock breaks this normal behavior and is reaching the extreme in the price and the volume, some kind of thing, then send the alert to sell majority. Selling rest comes after all this above. Selling all comes when when we have not sold anything, we send you the alerts to sell all. It could be at break even. It is the opportunity. It could be the opportunity to get out at loss or slight loss, or something is happening where we say sell all. Maybe the expiry is only 10 days left. We have February calls, and we have been waiting, and finally it just hit some kind of a price. And now we have to decide, okay, 8 days left in trading and we are getting this. So trying to salvage that position. So looking at the number of 8 days, we can make money or we can lose all. So okay, maybe we sell, or just the profit target, sell all. Sometimes the stock is moving in such a fashion, like let's say AMD, that or Tesla or something, a big Momo stock that give you the range. So sell this position between let's say option. Sometimes the spread gets wider. So you suddenly realize, oh my goodness, the spread is not normal. The ask is 8 and the bid is 7, supposed to be 780, 760, something like that. So then I try to figure it out, what is the range I can give you. So when you sell, or what is left in the stock, move. So when the stock is moving and I give you the range of the option and you set the sell order, so in that move, further move 40, 50 cents, whatever it is, you will be out in your option trade. So do that. Sell to close by market. So another example, again, an AMD so happened today. So sell to close. If you're huge in profit and the stock is moving extreme, then you just need to sell by the market close. So 5 minutes before market, if you can watch your chart, you can close. So another thing which we need to do as a trader, we need to watch pre-market and after market uh, movement in your open position, or even if you don't have. So some kind of, so this is another thing I do. So I don't walk in um, 9 a.m. Pacific. No, she is in the office. No, sometimes I'm in the office at 3 a.m. in the morning, and my team knows I'm there. So I tell, okay, I'm here. 3 a.m. They get surprised. Okay, he's here. So so I do that. Or most of the time I'm in my office 5:15, between 5:15 5:30. That's my routine. It's like I wake up and then the first thing I do is look at the market, look at my open position, something going on, some news was expected. Okay, this one is it. So watch that session before the market is important in your open position, and then figure it out by looking at the price, and then open your day chart and say, okay, when the regular session open, this is where the bar will print on this landscape, and what I'm going to do about it when the market open. So you define your range, clearly make yourself clear. I mean, you need to be sure when the 6:30 comes Pacific time, and suddenly the stocks start moving, boom, 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 this moving, that moving, is going this way, that way, market's going that, news is coming. So you need to make sure that this is where the bar will be, and it better not break this level. If it breaks, then I'm in trouble. And if it stays above, then I'm going to buy more and more and more and more, because I see now that is I got this, like, in the movie they show you you got hold of the tail of the big giant something, and you just moving around, like my when my daughter was little, she get the she had a doll, and then she grabbed the hair and then rolling, moving is like that. So make sure that when you get this, then you conquered that trade, and keep holding it, keep adding it as it moves, take advantage of that. So some event occurred, so like earning, some event occurred like FOMC, but during the pre-market, FOMC is not occurring, is during the market. So earning events occurring, some major product announcement, some CEO is leaving, some CEO pinch his secretary, and then he is leaving, and the stock is getting clobbered. So maybe that's the opportunity, for you to buy more, or so whatever it is, you need to be aware of. uh, Chances are stock will pull back during regular session. So most of the time, the pre-market session is just retailers buying. So look at the volume, see, evaluate, and if you see that if you have a position and it's gapping up, maybe it's time to sell right at the when the market open. During the first 15 minutes, the market for option, a lot of time the market makers don't open the regular session, the option. So you are at the mercy of the market maker. As soon as it opens, then be calm, evaluate, and sell. And in the case of AMD, like today, add more. So make sure you add more when you see the opportunity like AMD. So stock must gap up above red for calls and below red for puts. So we keep an eye on it. I send you the alert. Must continue its journey just like AMD continued its journey. So you can see the journey on a 5-minute chart, 5-minute, 10-minute chart. We all get caught in the initial jerk to the downside. It looks like, oh, it gapped up and now it's for tanking, and then we sell and then it goes up. So we get caught. So it happens to all. It happens to me all the time. And but I've trained myself. Most of the time I catch. So if the stock is gapping up and then it has more potential, I will have the time. If I remain patient and time and be confident that this is it. This is not, after gapping up, this is not going down, it's going up. So be bold and take some courageous action. So pre-market alert and strategy is sent to members. So I send you the alert, like just like today I sent you AMD. So the plan, that what we're going to do, hold, revise the target, and all that. So all this is going on in my life. So another thing, how to maximize gain. Adding to the existing position is good strategy. Again, I mean, these slides I did not prepare today. These are made a long time ago. So existing position is good. I'm always looking for adding to the existing position, because that's the position I already know why I am in. So I have already done the homework. I already analyzed it. I took the decision. And when I took the decision, I saw something. Uh, so when I saw something, I mean, if I'm wrong, I'm wrong. But if I saw something there and it's proving me correct, so why don't I add? So do that when you are in a big gains. So sometimes when you're in the big gains and the expiry is closer. So you're in big gain and the expiry, that option is expiring in 14 days. So now you will give back that again, and you will not have time to recover. So maybe you buy another month, you sell that month. So we did that in AVGO today. So I give you the example of AVGO. AVGO, we were losing 42%. Today we were up 40%. So what I did initially in the early morning, when AVGO started moving, I sent the alert to sell, buy. I told the members, buy March calls. This is strike, this price, and simultaneously hold the February, because February was losing 42%, and now we are looking for the gain. I kept watching, and then at the end of the day, near the end of the day, I sent the alert to sell AVGO calls February. So I got rid of the time sword hanging over my head. I made the money. The March is already making money. So do something, some adjustment, some strike, some new month, maybe sell this. Sometime you buy same month higher strike, because you are already deep in the money. So you take the profit and you say, okay, this has more potential. I'm gonna buy new strike same month, or you can do the new strike and a new month if the time is not in your favor. So always pay attention to the time. Maybe you can create the vertical spread. You sell against your long call, you sell the short calls. So when you sell the long short calls, when you do the short, you get the premium. So now you lock your maximum gains and you have the profit. So see that. Maybe you can buy some shares if you don't want to. So let's say you have a February calls and it's moving and it's looking good, but you need to exit. So who, if you have the money, then who says you don't buy the shares? You can buy the shares, calls, some shares, 100 shares, 200 shares, whatever is your criteria to buy. Maybe you open another account. So you have an option account here for speculative purposes, and you have another account for your position trading, or something which you do for shares, only for stock trading. So you open that account and buy 200 shares. You say, okay, this one is a good one. I'm going to put some 100 shares, 200 shares, and I'm going to sell the option. So option account is my speculative account. This account is my stock account. It's kind of reserved. So it's less profit, but less drawdown. So do that. When any news coming, I send you the alert to news. If any news, I send you update, technical analysis update. I prepare the chart and I send you, the chart. I also post in the, sometimes I post on the Facebook group. If some volume needs to be, update needs to be sent, I send you the volume update. I watch volume, I get the alert, and I send you the alert to log gain. So all this is going on in my life during the day. And sometimes we send you the alert to buy more. So dollar cost averaging, I'll show you the chart. I'll give you the example. Uh, it's- I do dollar cost averaging. So people say, so different people have different thesis in, just like thesis in life. Some people say, never, 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 ever, ever add to your losing position. I don't understand them, that why they say like that. I mean, you don't add Of course, you don't add to your losing position willy-nilly, just say, oh, let me add, buy more here. It's going down. Okay, I'm gonna dollar cost. So you just have some reason, find out that reason that you be ready to buy more. So when we see that reason, I see that and I say, okay, I know I've sent the alert to buy at 10, this meta call, and now it pulled back and is trading at 6. So I know that. I know how many days we are in the trade. I also know how many days to expiry left. I also know when the earning is coming. I know the support and resistance. I know all that. So I'm seeing everything. So in front of me I have 14 monitors. So one of the monitor is for dedicated for this. I'm seeing everything. So I say, okay, now this is the time. I look at the chart and I say, okay, I need to send the alert to the members to buy more at 6. So if you buy at 6 and you have a 10 before, so $10 means you invested, let's say you bought one contract. So, or let's say you bought two contracts before. So $10 means $2,000, two contracts. So you put $2,000 into it. So you have a bigger size portfolio. Otherwise, you won't be putting $2,000 in the option. At least you have $50,000 in it. So now Meta is trading at $6. So if Meta is trading at $6, so then you say, okay. So initially I put $2,000. So $2,000, how many contracts I can buy for $2,000? Trading at $6. So the answer will come, you can buy 3.2 contracts. Since you cannot buy 3.2 contracts, you will buy not 4, you will buy 3. So you say, okay, I'm gonna buy 3 more contracts at $1,800. So now you have $1,800 and $2,000. So total investment in that trade is 3,800. So your average cost goes down somewhere 8, whatever you divide by 5. So now so this better be right. This is just your second chance, like a second life. So this is your second life you got. So this has to be uh, correct. So I pay attention that I'm not sending you alert just to buy an average down. I'm trying to make sure that this is the first time I screwed up. I send you alert at 10, it's trading at 6. This is the second time. So now I know that I send you alert at 6 and I send you alert at 10. So I know I have some members who have a cost of 6, and I know I have some members who have a cost of 10. And I know some members, because the members who have a cost of 10, they did not average down. I don't know who they are, but I know they are out there. I know there are members who have a cost of 6, so I know that. And I know there are members, so the members who have 6, I know they never bought at 10. So there are some members who never bought it. And who are those members? They joined the service after I send this alert. So they never saw this trade alert at 10. They are seeing it at 6, and I'm telling them we hold the position. So they are in a better position. Now I know they are a member, they're third category of members who have a cost of somewhere 8. So I know 6, I know 8, I know 10. Now the trade should be managed in such a way that the person who bought 10, he should make money. But if he doesn't make money, it's okay. He is getting out at break even. The person who averaged down at 8, he makes money. So my exit point become the initial sell buy price, which is 10. So if I'm managing all this. So I'm not just sending you alert when it goes at 10 and say, okay, sell. So the guy who bought at 10 is a break even. The person who averaged down is still making money, and the person who bought at 6 is making a lot of money. So I adjust the target and everything, and I manage the trade accordingly. So I know what is the average cost and what was the initial buy price, etc. So I do that. Now there are many, 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 many criteria for exit. So there's the whole. I will explain later. There's a multiple exits criteria. So all that goes on. Millions of reasons to exit. So one of the I held a webinar 2 days ago on a conditional order. It's on YouTube, so you can look at listen to that. Profiting from conditional order. So this is one way of setting your sell order. So I'm providing you green target, yellow target, red target. I'm providing you all the sell alert. I'm providing you the option price to sell and or whatnot. And there is another way to sell your option is a conditional order. So you can learn conditional order by watching that video. on YouTube, the real Trade Genie. And you don't have to, but if you want, you can set the conditional order to sell your contract when the stock target is hitting the target. So your contracts are sold when the targets are hitting. So that's it for today. Let me see what I um, most of your alerts are sell. Does it mean sell all? Yeah, that when I'm saying selling to close, then it means sell all. Yes. So there's no before I did not. So I don't. So what is black box? Black box is a it's like somebody sold you some indicator, somebody sold you his system, and say, hey, you buy this system for $5,000 or $10,000. It will give you some green. You know, they back test, they show you all the winners by showing you all the results they have, and they sell you that black box for $10,000, meaning some system. So so you need to ask yourself, hey, Mr. $10,000 seller selling me this box, um, under what market condition you had this profit, or under what baskets of stock you ran, and whatnot. So there's a lot of behind the scene black box. So I did that when I started. I bought that black box for $3,000. So that's what it is. How about just trying a basket of stock that you are familiar with? Yeah, so I have. So I I have baskets. I explain about 167 to my knowledge in a hardcore, 250 in a core, and 150 in a non-core. So all that I have a different baskets, and I have a bunch of shares in a small stocks in a small cap. So I do that. So do you run scanners at interval time during the day? I'm not running a scanner at interval time. It's just whatever is coming. It's not like okay, at this interval I run the scanner. So not I'm watching it. Um, I'm not. I am evaluating the volume at a different time interval. So every 30 minutes I watch the volume. I analyze the volume. So every 30 minutes, half hour, then 1 hour, then 1.5 hours, then 2 hours. Every 30 minutes I analyze the volume. So I have a way of analyzing it. I analyze it. I spend tons and tons and tons and tons of money in my automation. So I've done a lot of automation. So a lot of things looks very complicated to you, but I know it's complicated. But when you automate, it become easier and easier. Yes, Henry. Yes. So the worst case, you're right. So worst case is just in case if the stock just tumbles. Uh, so when you're trading options, so when we are trading options, unless the stock, so when we're trading option, we are reading the chart of a stock. So Um, so just like I give you example of AVGO. So we bought AVGO call. I don't know if we were profit. Sometimes we are in profit and we go for a bigger and then it more profit. And then I said, no, I don't want to send the alert yet, more, and then it reverse. And then we see 42% loss. So that's what happened in AVGO. So AVGO is just doing nothing. It's just sitting on the sidelines, and a 42% loss. So tomorrow today it could have gapped down and then become 80% loss or 90% loss, but technically yesterday there was no exit. So there's no exit and I see 42% loss. So in option trading, you you're doing option trading. So if you set your exit on trading option based on option, your dollar loss, like you cannot bear it, then you're not trading properly. You're not trading the options correct unless the stock is telling you the exit. Then when you exit, so it may be the exit comes in such a way that you lose 80% loss or 90%. So it happens. So when you are entering in the trade, so that's what it is. When you're entering in the trade, you are convinced. You should be convinced that this is the trade which is telling me that the direction is this. So once you determine the direction, then you need to hold tight, like hold it like in a Braveheart movie. What is Wallace? So based on the Scotland. So hold it, and then finally you see the result. So I know Henry's. So I give you the worst case just in case it goes there, and then we know. So I am aware of that. So what else? SDG? I don't know dollar DG. What is dollar DG means? I mean, I don't know what you mean by dollar DG. Now let me read more question. Uh, yes, you work too hard. Yes, I work too hard. Uh, I know. What is black box? I explained the black box. I don't know about RSI, so I don't use RSI. Yes, I miss ADI. No, I know. All right, so these are the questions. And if you have any question, please send email. Otherwise, I'll stop here. I've been talking for so long, 1 hour and 40 minutes. All right. So thank you for coming, and I will see you in 3, 4 days. Thank you. Bye.